Now speaking, David Ometer, Head of Investor Relations. Thank you for the opportunity to present Snap's second quarter 2023 earnings. Our Q2 results demonstrate our continued progress in growing our business and creating value for our shareholders. Revenue grew by 32% year-over-year to $1.2 billion, driven by strong growth in our advertising business. We also saw a significant increase in daily active users, up 17% year-over-year to 265 million. We are pleased with our progress in executing our strategy and are confident that we are well positioned to continue to drive long-term growth. We are also excited about the new initiatives we have launched this quarter, including our new Snap Originals content, which has been well received by our users. We remain focused on delivering innovative products and experiences that will drive engagement and monetization. We look forward to continuing to build on our success in the coming quarters. Now speaking, Evan Spiegel, Co-founder and Chief Executive Officer. Thank you all for joining us today. We began the second quarter of 2023 with a strong focus on growing our community, accelerating our revenue growth, and leading in augmented reality. Our community grew to 397 million daily active users in Q2, and we saw an increase in content viewers and total time spent watching content globally year-over-year. To achieve a higher rate of revenue growth, we are focused on three key priorities: investing in our products to sustain community growth and deepen engagement, investing heavily in our direct response business to deliver measurable return on spend for our advertising partners, and cultivating new sources of revenue to diversify our top-line growth. We generated revenue of $1,068 million in Q2, a decrease of 4% year-over-year and an increase of 8% quarter-over-quarter. We made changes to our ad platform to unify the ad experience across our service and retrained our models to drive more in-session click-through conversions. We also saw record active advertisers in Q2, up more than 20% year-over-year, and improved advertiser retention compared to the same period last year. We launched Snapchat Plus, our subscription service that offers exclusive experimental and pre-release features, which now has more than 4 million subscribers. We are also testing sponsored links and conversations with My AI and have begun early testing of our enterprise services, our first SaaS offering. We are calibrating our investment levels to build a path to free cash flow break-even or better, even with reduced rates of revenue growth. We believe our leadership in messaging and our technology provides a strong foundation to help connect businesses to our large and engaged community. We are encouraged by the progress we are making and remain focused on our strategic priorities. AllianceBernstein analyst Mark Shmulik inquired, Derek, what gives you the confidence to guide more formally now? What are the puts and takes that go into the guide? Jerry, what's the best way to get back to double-digit growth? Is it increasing new advertisers or focusing on major accounts? Derek Anderson replied, thanks for the question. We've not provided formal guidance since the start of 2022, but our increased confidence in the trajectory of our business has led us to provide guidance for Q3. We've ramped investment in infrastructure to support monetization, content engagement, and My AI, which are key inputs to revenue growth. We've seen active advertisers up 20% year-over-year, higher active advertiser retention, and a 30% lift in purchase-related conversions. However, forward visibility of advertising demand remains limited due to sector-specific challenges in the back-end weighting of the quarter. Our guidance range for Q3 is between -5% and flat on a year-over-year growth basis, which we believe reasonably includes the attainable upside in all of the risks we see. Jerry Hunter replied, Mark, thanks for the question. We had a small number of customers adversely impacted by changes we made, mainly in North America. Over half of them have recovered their spend to prior levels. We're seeing more active advertisers, up 20% year-over-year, and more spending on lower funnel optimization. We've restructured the team and hired experienced leadership to drive operational focus. We've improved processes for bringing in new clients, launched go-to-market process improvements, and are systematically improving implementation of our ad products. All of this is helping us increase share of wallet and grow demand. Lightshed Partners analyst Rich Greenfield inquired, what is the balance between near-term and long-term revenue-generating employees, and how has it changed? Have you optimized headcount, and do you anticipate making further cuts going forward? Evan Spiegel replied, Rich, thanks for the question. We've always been clear that we're investing in our platform for the long term. We're focused on growing and optimizing the business we have today while also planting seeds for future growth. We've invested in innovation to compete with larger companies, and this has enabled us to grow to more than 750 million people using our service around the world. We've seen monetization from some of these new products immediately, but often it takes time. Last year, we made the difficult decision to sunset some products that hadn't yet reached scale and reduced our team size by 20%. We now support a community of 750 million people with a team of 5,000, so we're investing efficiently. We want to thoughtfully manage our cash flow and dilution, so we're focused on accelerating near-term revenue growth while simultaneously setting up the business for long-term success. We have the right balance of investments to navigate this challenging period and continue to invest in our longer-term initiatives. Derek Anderson replied, "Thanks for that question. We've been making substantial investments in our ad platform and content to drive deeper engagement. We're encouraged with the early results, such as a 20% rise in active advertisers, higher retention, and a 30% increase in purchase-related conversions. We're also seeing time spent on Spotlight more than triple year over year. We plan to make a further step up in investment in Q3 to accelerate progress, particularly in areas related to monetization. We expect infrastructure per DAU to increase from 11 cents to 70 cents in Q2 to a range of 79 cents to 84 cents in Q3. We'll measure the returns on these investments carefully and adjust accordingly. We remain committed to charting a path toward adjusted EBITDA, profitability, and positive free cash flow, with trailing 12-month free cash flow at positive $81 million and operating cash flow at about $250 million. Piper Sandler analyst Tom Champion inquired, "What progress have you made with DR tools? How has Scan 4.0 adoption impacted recapturing lost cohorts and gaming and app downloads?" Evan Spiegel replied, "Tom, our focus right now is on the go-to-market side of our DR tools. We've released a dashboard to ensure advertisers are sharing signals in a privacy-safe way, and we're taking a consultative approach with clients. For e-commerce and purchase-related conversions, we're seeing strong momentum. On the app side, there's still work to do, so we'll be focusing on tools like value optimization to optimize against users who are likely to spend money in their app. We expect to have this in place by the end of the year." Bank of America Merrill Lynch analyst Justin Post inquired, "What level of cost per user or gross margin do you think will level off? How should we think about gross margins in the next year or two? Is Spotlight usage offsetting Stories pressure and moving the needle for the entire ecosystem?" Derek Anderson replied, "I'd say on the gross margin pressure, we articulated our expectations for medium and long-term margins at our recent Investor Day. We're investing heavily in infrastructure in Q2 and Q3 to support our direct response advertising business and drive engagement, which will contribute to our top line. We're confident these investments will reaccelerate our top line and show strong unit economics." Evan Spiegel replied, "Thanks for the question about Spotlight and our content business. We're seeing strong growth globally, with 400 million monthly active users and time spent up 3x year over year. In the US, Friend Stories viewership is trending better than forecasted, and Spotlight and Creator Stories are driving momentum. We're getting closer to flipping positive in aggregate, which is really exciting." Barclays analyst Ross Sandler inquired, "What is the expected impact of infrastructure cost per user, particularly with regards to my AI, and how do the new regional heads of sales affect revenue?" Derek Anderson replied, "I'll take the first bit on infrastructure. We're making significant investments in Q2 and Q3 to drive our advertising platform, specifically in terms of content engagement. We're also making smaller investments in my AI and other products like lenses. The focus is on improving the ad platform and increasing inventory to grow revenue over the long term. My AI has been manageable so far, with good unit economics and a relationship between intent, personalization, and monetization. We're monitoring it carefully, but we're comfortable with what we're seeing." Evan Spiegel replied, "I'm pleased to report that our regional presidents have been making great progress. Ronan has been in the role for 9 months and has identified more effective ways to go to market in EMEA. We've been applying those learnings globally. Ajit is leading our APAC business and Rob just started in the Americas in Q2. Rob is making changes to his team and building vertical plans to identify opportunities. We're also debugging on a case-by-case basis with advertisers who haven't returned to prior levels of spend. We're focusing on lower funnel goals and diversifying our advertiser base. This regional focus has been beneficial for revenue, user growth, partnerships, and content. We're excited to hopefully return to growth in North America soon." Goldman Sachs analyst Eric Sheridan inquired, "What is your view of the competitive landscape for user growth, engagement, and rising utility in your app compared to other companies? How are you investing to capture rising utility and create monetization opportunities in the medium to long term?" Evan Spiegel replied, "Snapchat is focused on connecting friends and family through visual communication. We've built different platforms to increase engagement and monetize core communications use case. We believe that providing a place for deeper relationships is important in a world where other platforms focus on public social media features. We've been successful in driving more viewership and time spent through better sharing of content between friends on Spotlight. We've also introduced My AI, an AI chatbot that improves business performance by using clear intent signals to optimize content and advertising. Snapchat continues to prioritize supporting relationships between friends and family and has built their business around that."